All right, everybody, we're live on the Crypto Coin Show and blockchain interviews, where we find the latest and greatest innovations in cryptocurrency and the blockchain industry. On today's show, we have Alex Wearn from Aurora. Thanks for coming on the show, Alex.
Thanks for having me, Ashton.
No worries, man. So tell me a little bit about yourself, how you got into cryptocurrency, and how the Aurora project got started.
Thanks. I've been involved in the blockchain space for about 5 years now. Originally found Bitcoin like most people. An economist myself, so was curious about the idea of a decentralized currency that didn't require a third party for clearing and settlement. Was really captured by the Ethereum white paper when it was released, and the idea of extending that technology to applications, bringing it beyond just the idea of a ledger and balances, and allowing it to actually run code on a blockchain. And that's kind of where we got our start with the idea of decentralized exchanges. So my co-founder was working on EtherX, one of the early implementations of an Ethereum exchange. That project ended up disbanding, and we started Aurora. Our first product here is IDEX. It's a kind of a new form of decentralized exchange where we've identified some of the challenges and usability issues that exist with other products out there. And we think we've got a unique solution that helps tackle those problems.
Awesome. Yeah, I looked through the exchange a little bit, and I'm really interested in decentralized exchanges. And I think looking forward into 2018-19, it's going to be the future of trading.
Absolutely. I think it's going to take, the technology needs to catch up with the demand. Centralized exchanges still provide some benefits to users, most notably the speed and throughput that being on a blockchain can't compete with. But I think just the security issues and the trust challenges that you have when you have to hand over your cryptocurrency to another person, another entity's private keys, that's going to drive eventually towards decentralized exchanges. And it's really what the whole movement's about, the ability to manage your finances and kind of be in control of your own assets.
For sure. I think everyone wants to know they have control and not have to worry about an exchange getting hacked, like a Mt. Gox or a Bitfinex kind of attack where somebody else was actually holding your money and then you lost it. So that's awesome. I'm glad that you're getting part of the decentralized exchange movement. And I know there have been a lot of decentralized exchanges popping up recently, some big ones like Kyber Network and stuff. Have you noticed like a lot of them popping up? And what do you think is different about IDEX as opposed to these other ones?
There's definitely a lot of activity in the space. I think people are excited by the promise that it brings to, it always felt a little bit backwards that these decentralized currencies, you had to send it to a centralized entity in order to buy and sell it. So IDEX is a little different in the way we've designed it. So there's two kind of fundamental flaws we've seen with other decentralized exchanges on Ethereum. One is the fact that if you're relying on the blockchain for balances, then it's going to be slow to update. So if you're waiting for a transaction to mine before you know whether or not the trade went through, it's going to be a slow, poor user experience. The second is that if you're relying on individual users to broadcast transactions to the blockchain, you can't have confidence that a transaction is going to go through. And both of those kind of manifest itself on what I would say probably the most popular decentralized exchange is EtherDelta. So you have situations where there's an order that appears to be on the books, but it may actually already have been bought, so to speak, and that someone's already placed an order or submitted a transaction to buy that particular order. You can also have what are called race conditions, where two individuals can see the same order and try to race to fill it. And whoever pays the higher gas price, or in some cases, just whoever's transaction gets mined first, gets lucky and gets the transaction, and the other user, their transaction runs out of gas and it fails because the assets aren't there anymore once it goes and tries to make the trade. So with IDEX, our innovation is the way we kind of structured our smart contract. So individuals have to deposit into the smart contract in order to trade. So you deposit into our smart contract and you're credited with the balance, both in the contract and on the exchange. And then from that point on, all the transactions are submitted to the network through the exchange itself. It still needs to be authorized by the end user's private key. So it has that security element of a decentralized exchange. No funds can move until the user authorizes it to happen. But the key difference is that the trades are submitted to the network by the exchange itself. So what does this mean exactly? We're able to now provide two separate databases, if is kind of a way to think about it. So one is kind of our server, where the individuals create a trade and submit a trade, and immediately their balances update. So if you buy an asset, you immediately see that asset has been purchased, and you actually turn it around and immediately sell it. So this is important for, when markets are moving quickly. If you want to take advantage of quick price movements, you don't want to be limited by the speed of the blockchain. What happens though is those transactions are authorized by the end user, and then behind the scenes, they're submitted to the network for processing. And our exchange makes sure that all transactions mine in the correct order so that the smart contract balance always catches up and eventually matches what the user has already seen on the exchange itself. So in that example I just gave, if you make a purchase and then sell it a few seconds later, we would have 2 authorized transactions submitted to the blockchain, and they're submitted in the correct order to make sure that the balances in the contract match what's shown on the exchange. And then another benefit of this is that we're able to offer free cancels for users. So if you're having to pay in order to cancel transactions, it's going to get costly if you're trying to market make. So bots are always buying or adding and removing orders, as the price moves around a certain point. So if you're able to cancel for free, that's going to actually make that a cost-effective strategy. Whereas if you're having to mine a cancel into the blockchain every time, it's going to be cost prohibitive to do that.
Definitely, yeah. I've had a lot of experience using Ether Delta to try and get coins that aren't listed elsewhere. And that's one good thing about decentralized exchanges is you really don't have that central authority that decides which coins are going to be listed. On Ether Delta, once the coin comes out, anybody can list it in that sense. But at the same time, a lot of experience that people have had with Ether Delta, being one of the most popular decentralized exchanges, is it's very slow, it's very hard to learn to use, and the people who developed it just didn't do a very good job. Even technical people have a tough time selling on decentralized exchanges, and I think that's one of the barriers to entry right now.
Absolutely, and we're focused entirely on usability, because I think that's kind of the first hurdle necessary to take on the other centralized exchanges. If people find it confusing, or as you mentioned, sometimes people mix up the price options on Ether Delta and do a really poorly priced order that's not in their favor, and then they're racing to mine the cancel while others who've noticed the mispricing are racing to fill the transaction. So it can create some odd behavior, some odd incentives. So we're really trying to solve that with our design.
Cool. Yeah. So you guys are doing a sort of like a stable coin built into the exchange to allow for more usability, or how does that work?
So when we were designing the decentralized exchange, one of the key insights, and I guess it's obvious if you think about it, but a decentralized exchange can only trade blockchain-based assets, right? You have to be able to deposit the asset into the smart contract in order to have it as part of a trading pair. And right now, all of the assets on the exchange trade against Ether as a base market. So you have Augur, ETH, right? That's the trading pair, which can be challenging if you have both of those currencies fluctuating pretty dramatically. Ideally, you're trading against a stable base currency, but without having a connection to bank accounts, we can't offer something like dollars or euros. So the question becomes, how do you create that decentralized stablecoin? And there's some people working on projects out there, and we thought that we had a unique opportunity that by combining the exchange with a stablecoin itself, to create kind of a new model, a new approach. So there's a couple things that are kind of, you can think of it as backing the stablecoin, kind of giving it collateral. One is revenue from the exchange itself. So as we earn transaction fees from users, that goes into a reserves of sorts that will be used to back and collateralize these stable coins that we'll be issuing. The other is actual endorsement, so to speak, or backing from the exchange itself, in the fact that you can always redeem them in lieu of trade fees at their target value. So instead of paying your trade fees in whatever cryptocurrencies you're trading, you can pay them in this stable coin and actually do so at a slight discount. The idea is to provide a place for customers where they can always spend these stable coins and know that they will always have value regardless of what they're trading at on the open market. So you can imagine a situation if people start to sell them and the price starts to dip, traders are now incentivized to purchase them and prepay their transaction fees because they'll actually be able to save on their trading costs and improve their profitability. And it's kind of how, if you think about how fiat currencies work. So, the US dollar is arguably the most stable currency in the world. And that's because there's a big entity. You can think of the US government as a retailer. They are, collecting $3 trillion of annual revenue in the form of taxes. And when they have any bills, they only pay it in the form of US dollars. So that gives it a huge amount of demand, where you can be certain that you'll always have a place to spend that cash. So we're trying to think of what's the analogous, kind of counterpart in the cryptocurrency space. And we think that's DApp, or decentralized application endorsement. So we're starting with IDEX, and then we want to recruit others to eventually join in, and have that same promise on their products. And then once we've kind of built up the stablecoin and people have, kind of confidence in it, we know this is kind of a new idea, and we think it's going to take people some time to get familiar with it. But when people have been paying with trading fees and it's being used as a stable base currency on IDEX, we'll actually begin lending it out to customers. So there's a lot of companies that are working on decentralized credit scores, decentralized identity, trying to create some of the financial products that exist in the existing world, but using a blockchain, using private keys as kind of the piece of who these individuals are. And we want to kind of expand that into that space as well, using this currency as a vehicle for lending on the blockchain.
Okay, so in terms of it actually being called a stablecoin, it is backed by some amount of fiat currency, or is it pegged to like an American dollar price?
So yeah, we're pegging it to the dollar to begin with. We do want to explore eventually expanding that. There's the question is stable relative to what, right? Most people are familiar with and comfortable with US dollars, euros. We may release versions that are mirroring different fiat currencies. But we do also want to kind of push the boundaries of, is there another basket of assets, a basket of commodities, a basket of world currencies. There's the SDR, which is a weighted basket of, all the largest national currencies. So we do want to kind of push the boundaries and explore, how can we make it even more stable so that we're not tied to the monetary policy of these different governments, right? And then eventually start exploring what our own monetary policy would look like. There's a rich period of history known as free banking, where private enterprises were issuing their own currencies and were responsible for maintaining kind of the stability and the faith in the currency. And if they got too loose with their lending standards, and others would find out about it, then the value of the currency would fall. If they had too many bad loans on their books, so to speak. So we think that there's an opportunity to revisit this, and that blockchain technology provides kind of a unique technological leap or change that wasn't there before in terms of the transparency aspect. So you can imagine that you'll be able to see how many of these are in circulation. What's kind of the revenue of the exchange, and how quickly are they being pulled out of circulation, so to speak, by paying with trade fees? How are the loan repayments looking, right? What's kind of the default rates? All of this stuff that individuals be able to assess and see, whether or not that they think that this entity is stable, and kind of sound, or if there's any issues. So that's where we're really excited to kind of use the technology to do something that's never been done before.
That's awesome. I really agree with the fact of having open transparency and being able to see the circulation and the movement of the currency in the economy. So in terms of IDEX as a business, how far along is it already generating revenue, and are a lot of currencies being added, and is there a lot of trading going on, and how's that going?
Yeah, IDEX is live. It's been live for a little over a couple months now. We're seeing anywhere from $100 to $200,000 of daily trading volume. We add pretty much any currency that people ask us to add. We're wary at the moment of trying to add any assets that might be blatantly trying to scam individuals, and we're actually changing our architecture so that people can add coins and trade them if they want. And then we'll kind of, once we've had a chance to review the project, we'll open it up to other customers. But like you said, part of the movement is, if there's a group of people out there, who are we necessarily to say that you can't trade this? But, we do want to kind of be wary of kind of the space and protect others from that. But yeah, so IDEX is live right now. And then we're working on, eventually we're going to release, a few months from now, we're going to release the Boreal. And incorporate that into the exchange itself. And we do have an initiative as well to kind of expand IDEX and help address some of the issues that we've seen with the blockchain itself in terms of scalability on Ethereum. So there's been some other projects that have been announced that we're kind of watching closely with the ability to create a side chain and bring transactions off of the main Ethereum blockchain and only settle kind of, in this case, withdrawals to and from the exchange, only settle to the main chain when necessary. So as part of our project, we've got our own network token, Aura, that will be used to power the side chain. So it'll be a proof of stake type model where individuals with this token will stake it and be responsible for securing the transactions that are occurring on this side chain. And that'll allow us to, kind of grow and scale the exchange itself, while the core Ethereum blockchain is working on scaling solutions. And I think that's been the way a lot of people in the space see this going is if you have, a closed ecosystem, so to speak. In this case, we have an exchange that people will just be trading with, within the exchange. We can offload a lot of those transactions to the side chain. And then expanding on that, where we really want to take this is opening that up to make it a network of other exchanges similar to IDEX. So that's where we really like this idea of a shared liquidity pool. How can each exchange is going to have its unique value proposition to users. Maybe it's a good on-ramp for people in a certain geography, or it has a trading interface that's, familiar or friendly to, certain types of traders, users with certain needs. So that's where we really want to take this is how can we create a unified order book, but at the same time, allow people to, create their own kind of unique space or their unique applications.
Man, that's pretty cool. So it's like a multiple token effort and a multiple exchange effort in the long run.
Absolutely. Yeah. And we know that this is quite an ambitious project, right? But we, I think we're really focused on building it out in stages. So, it starts with IDEX, which we've got live today. And we've shown that, it's the most advanced decentralized exchange out there in terms of the user experience. And then from there, we're going to slowly build it out. So, release the Boreal, get people comfortable. That's the name of our stablecoin, if I hadn't touched on it earlier. Release the Boreal, get people comfortable with this idea of a decentralized stablecoin that's backed by this, group of kind of collateral, and then eventually build out this sidechain piece to help the exchange itself expand.
Okay, so if I was going to be looking into IDEX and looking at the Aurora and the token sale, like what information can you give me about the token sale metrics and how the ICO is working?
So we have two coins that are available during the token sale. So the primary token that we're selling, it's called DVIP, and it's a membership token to the exchange and the Aurora network. The primary benefit of DVIP is that it gives you 3 years of free trades on IDEX. So depending on how much you trade, we kind of looked at other popular exchanges, Liqui, Poloniex, kind of the average daily trading volume of a user. Depending on how much you trade, it can be a lot better deal than paying a la carte, so to speak, in terms of on a per transaction basis. And then with that DVIP also comes a free stake, a free portion of our network token, Aura. The idea being that members who purchase and help fund the exchange effort now are able to then participate in the staking effort, which is in the future, where how we'll be remitting our transaction fees from the exchange to those who are providing security to the network. So similar how the Ethereum network, the miners are paid gas fees for mining transactions of users. In this case, the Aura token holders who are staking and securing the network will be getting transaction fees from the exchange from supporting and hosting that economic activity. There's all the information is available on our website, AuroraDAO.com. If you go to the token sales section, you'll be able to see a full breakdown of DVIP, Aura, and the benefits that each provide.
Awesome. So you say that this one coin is a proof of stake coin. So does that mean that it's staking on its own blockchain?
That's exactly right. So it'll be its own sidechain network. So the Aura token will be running its own sidechain that connects to the main Ethereum blockchain. And then that's how we're going to be able to offload all the transactions associated with the exchange, get that scalability and throughput before the Ethereum network has scaled. And then also allow us to open it up to other exchanges as well. So we think that, there's also other blockchains working to be EVM compatible. So that's where we think it could be really cool, where if there's other, EOS, Definity, others that want to interact with smart contracts, it's possible to create a side chain that can have interaction with all of those. So that's really where we see this future going, where it's really this truly open, permissionless system where you're trading all these assets on all these different blockchains.
Yeah, that's really awesome to be able to transfer to other blockchains, because I know there's a lot of competition coming up with blockchains similar to Ethereum, like EOS and Archain and these other ones that are working on scaling, and they might be end up scaling faster than Ethereum. So it's to be able to be moved to those other blockchains and still have these transaction protocols, that's like super awesome.
Absolutely. And I would say we're blockchain agnostic. We're on Ethereum right now because that's where everything's happening, right? That's where all the ICOs have been launched. It's really where you see all the network tokens being generated at the moment. But I agree with you that, you see EOS, for example, is, willing to make some trade-offs in terms of full decentralization with their delegated proof of stake model. But it's certainly going to have, if their claims are successful, it's going to have the transaction throughput that Ethereum won't have for many years. So it remains to be seen what matters to users. Do they prefer the full decentralization? Are they willing to give up a little bit on theoretical security in order to have that higher transaction volume and user experience? So we're definitely, kind of watching all of these eagerly, and, we're going to make sure that we're out there kind of supporting and innovating and building on, whatever is kind of the most promising blockchain at the time.
Awesome. So where do you see Aurora halfway through 2018, about 6 months from now, and at the end of that year as well? Where do you see it? Where do you see it at that point?
The big focus at the moment is growing the exchange and building that liquidity. So one other thing to mention is we have a market making program to help incentivize users to bring liquidity to the exchange. So anytime your trades are purchased, if you're creating limit orders on the exchange, you're actually earning Aura tokens, earning that network token. So it's our market making reward program to incentivize liquidity. So that's really how we're trying to jumpstart it and get that trading volume, because it's going to be so critical both to our growth as a company as well as to the growth of our future development plans. So the more revenue we're earning, the more we have to put in that reserves to back the stablecoin, and then the more that individuals will be able to pay transactions with the stablecoin, kind of the more velocity it has, and it'll help build up kind of the validity and trust around it. So I'd say mid 2018 we want to be doing millions of daily volume, certainly in terms of the exchange. We'd like to have the Boreal live or close to live, so that people can start to get their head around this idea of a decentralized stablecoin that's backed by this basket of collateral. And then 2018, end of 2018, I think we'll be doing the same thing, just more growth on the exchange, further growth on the Boreal, and then really starting to work on that sidechain protocol that I mentioned.
Interesting. One last comment. I know a lot of the major exchanges are doing hundreds of millions of dollars in volume right now. But there was the China story where the Chinese had 90% of the Bitcoin volume, but it turned out that because they had no trading fees, bots were trading back and forth, and other exchanges as well have been trying to inflate their volume to make it look like it's a more popular exchange than it is. Can you comment on the differences between centralized exchanges inflating volume and decentralized exchanges, and whether bots can make trades the same way on decentralized exchanges?
So I guess it depends on the trading engine. If there's an exchange that allows, matching of an individual, if they allows the account to trade with themselves. I'd say the big difference is that because you're actually having to pay gas for the network to process your transaction, you can do that, but it's going to get costly, right? Because every trade, in addition to actually paying the transaction fee, you're paying for the network to mine it. And you'd be able to see that, if you're watching kind of the blockchain and the smart contract. I'm not too familiar with the story, but my understanding of the Chinese exchanges was that they were free to trade on. And so you had people watch trading back and forth, like you said, in order to inflate the value of the assets. But if you have some sort of charge, even if that's just, the gas fee for the network, it's going to make it more cost prohibitive to do that.
Definitely. Well, I'm looking forward to seeing decentralized exchanges having more volume and centralized exchanges having less volume. So we'll see.
Absolutely. You and me both.
Yeah. So thanks for being on the show, Alex. If my viewers and everybody wants to know a little bit more about Aurora, where would be the best place to go?
Check us out at AuroraDAO.com. AURORA DAO.com.
Awesome. Thanks for being on the show, and I'll see you next time.
Thank you, Ashton.